Game over. Why Lucid will outperform Tesla in the long term. The electric vehicle or EV market is heating up as new entrants and established manufacturers compete for a piece of this lucrative pie. Tesla, the undisputed market leader, is on fire, achieving the largest sales and net profitability in the company's history in the second and third quarter of 2021. Meanwhile, Lucid Group, an up-and-coming EV firm, has yet to mass-produce its premium vehicle, the Lucid Air. The Air, on the other hand, is said to be able to compete with the Model S and other luxurious brands. Oil companies ruled the planet 10 years ago, and Tesla had yet to be formed. It has not changed so much since then, but 10 years from now, the auto industry's leadership may look very different than it does now, particularly if electric vehicles, or EVs, outnumber traditional internal combustion engine, or ICE vehicles in major markets. Now let's discuss why Lucid will outperform Tesla in the long term. Tesla has a market capitalization of $1.227 trillion as of November 2021. According to our research, this places Tesla as the world's sixth most valuable corporation by market capitalization. It was worth less than $40 billion exactly 5 years ago. Lucid, by comparison, is currently valued at around $60 billion. So how did Tesla's market cap increase by more than 30 times in just 5 years? Much of it has to do with a 180-degree shift in shareholders' opinion, which has shifted from widespread skepticism that the company would fail to widespread confidence that the organization will succeed. Tesla's stock price represents an idealistic future in which the company maintains good gross margins, a rapid growth rate, and revenue from sources other than car sales, while scaling production numbers in line with the other big manufacturers. To be honest, Tesla is a much better company than it was just a few years back. It went from failing production goals, struggling to stay profitable, and reporting inconsistent quarterly results, to becoming a global success in 2021, with a rapidly growing top line, a high gross profit margin, and a positive annual net income. In short, Tesla's market price surge is a result of changes in the market sector. The notion that a shift from internal combustion engines to electric vehicles is in the future of the company's actual top and bottom line development. To put Tesla's expansion into perspective, consider that the business will produce roughly 5 times as many cars in 2022 as it did in 2017. Tesla manufactured little over 387,000 cars in the first half of 2021, compared to 510,000 in the entire record-breaking year of 2020. It also made a profit of nearly $1 billion in the second quarter, more than any other full year in the company's history. Despite this outstanding performance, Tesla remains an expensive growth company based on traditional valuation criteria. Tesla enthusiasts, on the other hand, feel that the company's first-mover advantage and worldwide potential will allow it to reach even greater valuations over time. Lucid's long-term strategy is to manage 3 business sectors: automobiles, power storage, and innovation, which includes the battery pack marketed to electric vehicle car companies. The obvious answer to how Lucid may keep up with Tesla by 2050, if not to overtake it, is to manufacture more vehicles, generate more money, and expand at a quicker rate. However, the big picture is that Lucid must build brand image and awareness, as well as establish and maintain a technological edge over its rivals. Tesla's success is largely due to its automobile's innovation, aesthetics, and efficiency. Tesla's CEO, Elon Musk, is a divisive figure, and the company has a good proportion of ardent supporters and detractors. Tesla came out on top despite its difficult history, years of capital waste, production problems, and its idiosyncratic CEO. The idea is, in exchange for amazing technology and growth, investors would put up with practically anything. Lucid has created a wonderful vehicle and has been awarded $4.4 billion in finance to expand its operations and mass-produce the Lucid Air. Given that it does not plan to make a profit in 2022, the company will most likely need to raise more capital in the future. However, if it can demonstrate that it can meet its objective of delivering 20,000 Lucid Airs by 2022, it should have no trouble collecting additional financing. Wall Street has demonstrated its unquenchable thirst for pumping millions at potential ventures, and hope it sticks in the era of special-purpose takeover businesses and outright listing. The 2022 Lucid Air, or even Lucid's intentions to produce the Lucid Gravity, aren't the company's most valuable assets. Rather, it's the corporation's ability to innovate and be creative, as well as its willingness to keep pushing the envelope to be the best automobile company. Lucid will face a critical period in the next year or two. However, if it can hit the ground running and demonstrate its production capabilities, keep attracting reservations and increase demand, the company might develop significantly in the future. By 2030, Lucid is unlikely to be valued more than Tesla. Between now and 2040, however, there is a case to be made that Lucid is a superior investment to Tesla. When comparing the potential of both electric car firms, it appears that Lucid has a better chance of tripling its value than Tesla. Lucid, on the other hand, appears to be far more likely to crash or perhaps go bankrupt than Tesla. With that backdrop in mind, investing in Tesla is the safer choice in the EV industry. For individuals who want to invest in a younger firm with more upside, Lucid offers a higher risk, potentially higher reward alternative. Do not forget that 5 years ago, Tesla was what Lucid is now. Tesla is in the best shape it's ever been, with impressive results and a strong profit margin. The capacity of Lucid to maintain a technological advantage is its best chance of passing Tesla by 2050. Well, that's all. Thanks for watching, and we'll see you in the next one.